Good morning. Welcome to SVN Live, the SVN Weekly Property Broadcast for March 5th, 2018. We want to welcome everybody into March. All our invited guests, we thank you for joining us this morning. We have a great lineup for you, and all of us, of course, are headed to the National Conference for SVN. Looking forward to that. As always, we've got a couple of economic talking points we'd like to share with you. Keeping track of the numbers is a very difficult thing. The numbers are flying at us all the time. A couple of leading economic indicators we always keep an eye on is construction spending. Residential is alive and well, and certainly if you ask our SFR hub and other people that are affected by residential construction, they see nothing but boom. 10.1% for residential, but look at the commercial side, non-residential in 2017, only up about 60 basis points. The Census Bureau reported total construction for 2016 being up about 2.6%. Private is absolutely on fire in residential, including apartments, and of course the non-residential is lagging a little. The growth in the private construction indicates broad positive activity in the overall economy, and everyone believes that's going to continue through 2018. And certainly there is a lot of discussion in Washington about pending legislation for infrastructure that we desperately need to be repaired in America, and that may affect the non-residential construction as we go forward. All right, we also want to let you know that our consumer confidence rebounded in January, which is always great. I think it's an indication that the tax bill came out, everyone absorbed it. Maybe they don't like it all, but they certainly now at least understand it better. Present situations index declined slightly, but the expectation index grew a little, and that's what is the important one. February starts and March, where the instability of the stock market certainly caused a little consumer confidence hiccup, but look at that as something that's just a bump in the road. Got a lot of closed transactions we want to highlight this morning. First one up, Joel Catan and Anthony Paragon, two of our industrial dynamos down in Miami marketplace, just closed another one. Typical construction of industrial. However, look at the price per foot, $97 a foot, almost twice what it is in Chicago for a similar asset. Congratulations to our team, and we look forward to seeing them in New Mexico. Pete Colvin closed another deal, a Dollar General. This one closed at $1,391,000 and change. Brand new construction, brand new 15-year lease, and of course a 1031 exchange client. Closed in 24 days. That's the kind of stuff Peter likes. All right, we want to congratulate Jeffrey Henwood. He just closed this Florida opportunity. It was a land parcel ideally located for $1,850,000. The property was foreclosed on, and that's where he got involved. They closed December 15th. Very happy about that. We finally got it on the closing slide. We're glad to have that as well. Congratulations, Jeff. Hey, we want to go to Chicago, congratulate George Lau and his team members, Jim Sears and Reed Bennett. George took the lead on this one, did a great job. $2,340,000 went in under contract in a month. Multiple offers, which is very typical of the high demand area that it's located in. And we want to congratulate George. Nice job. Phoenix, Arizona, congratulate Justin Horowitz and Paul Borgeson. They just closed this office opportunity in Phoenix, right in the corridor on Clarendon Avenue, right off the Central Avenue corridor. Owner user purchase, U-Haul bought that. That's where they're headquartered, and looks like they needed more space. Congratulations to our team in Phoenix. Tony Velcamp, congratulations. He just closed this office building in Sarasota, Florida. Closed at $5,250,000, over $115 a foot, just under a 9 cap. And if you look at the numbers on this, the seller bought the property in 2014 at $1,280,000 and just closed at $5,250,000. SVN leased it up and took the occupancy all the way up to 90%. Buyer gets the opportunity to occupy the last 10%. What a deal story. Tony, congratulations. Obviously, added value all the way. Joseph and Joe closed another one. This is an industrial deal in Ashland, Ohio. This closed at $11.3 million. Been working with these clients for years. It was a long-term master lease, and Joseph and Joe did it again. Congratulations, Mr. Rowley, both of them. All right, we've got $24 million of inventory to talk about this morning and over $562,000 worth of commission to share. As you know, 100% of the time, 50% of the commission's available to you when you close a transaction with us. And we're going to bring up first Spencer Krigley and Kyle Kennedy. They're on the road today, and they're going to join us from the road.
Hello, good morning, SVN. This is Spencer Krigler and Kyle Kennedy. We are traveling, so if you can't hear us well, we apologize. We have Crown Point Place Apartments located in Salisbury, North Carolina. This 32-unit value-add deal is roughly 45-minute drive from Center City, Charlotte. It is value-add because it does have some deferred maintenance and has the potential to increase rents pretty substantially within the next few years. Currently, the average rents are about $633 a door per month, and we believe that by Q2, we'll see the average go up to $650, and that's when we'll start to see some good returns. Kyle, if you want to touch on the rents and some other aspects of the property, go ahead.
Yeah, so the rent comps that we pulled, within a 2-mile radius that were developed in the early 2000s, late 1990s. This property was developed in 2001. The rents are averaging $725 with similar finishes to Crown Point. So we believe with the proper management in place and capital improvements plan, it can easily be done to increase the rents. Currently, the rents are averaging $633, and just by getting the rents up to $650 on average, really increases the numbers. So if anyone wants any more information, just reach out to me and Spencer. We'll be happy to share everything with you.
All right, guys, thank you very much. Be safe.
Thank you.
All right, Robert Hammond, he always has gorgeous real estate for us. Today's no exception. This is in Jupiter, Florida, priced at $1,250,000.
Thank you, and good morning, John. SVN, right smack on Indiantown Road, the main business road for all things in affluent Jupiter, Florida. It's a retail office building, great frontage, and additional occupied office space that brings in additional income. Unfortunately, from when we just listed this, we've had 4 offers since Friday, and as of this morning, under contract with a very short due diligence and closing. So I apologize for taking extra time in this space while waiting to see some of those monster deals today. Thank you.
All right, Robert, thank you. Never apologize for great real estate. Jennifer Hopkins and Olivia Szynski out of our Chicago office have a Wheaton opportunity for you that is truly a great added value deal.
Hello?
Well, there we are.
Hi, John, I'm on. Can you hear me?
I can. Go ahead, Jennifer.
Okay, wonderful. So this is an 18,000 square foot, 2-building office complex, 2 stories, built in the 1980s. It's currently an excellent value add opportunity for investment, about 41% occupied. This property was actually under contract for a new development opportunity. Unfortunately, at this time, the development opportunity here is just going to take too long. And the owner has decided to put it back on the market with just an investment sales. Having said that, they had not done any leasing in about 3 years, but it's an excellent location with nice size spaces. They're actually on the smaller side, which is in great demand in this area, with a rental rate of about $16 modified gross. We anticipate a lease up to bring this property to about 80% of about 12 months on a lease up. So excellent opportunity here 35,000 by side fee, pardon me. And do please call Livy and I on this property. We expect that it will go pretty quickly.
All right, Jennifer, and then your other one on Butterfield Road.
Yeah, great. So also in the same general area, this is a much bigger property. It's a 64,000 square foot, 7-building office complex. It varies in product type from a 3-story traditional office building with an elevator service to 1-story individual units. And we also have 2-story buildings, which is what's pictured on the slide. This property was on the market early last year, and it didn't sell. It was priced much higher. We've done leasing over the last year. It's been extremely active. I would say our most active property. We did 8 new leases in 2017, and we've already completed 3 new leases in 2018, and I'm working on 2 more. The size of square footage varies anywhere from 300 square feet all the way to a full floor of over 5,000 square feet. So we offer a little bit of everything at this property. The buyer has lowered the price to $2.3 million. It's about $35.87, 36 bucks a square foot. It is professionally managed, and in late 2016, they spent over $400,000 in capital improvements, including new roofs, parking lot, all the common areas, new gutters. So there's very little capital expense expected on this property. And this one has a buy-side fee of about $69,000. So it's a very nice value-add opportunity.
All right, Jennifer, thank you very much. And you're right, love that low price per foot. Let's go to Frank Jermusik, our council chair of resorts and golf courses. He and Edward Rupp, Chris Kabesh, and Dustin Wilhelmi are at it again. This is Iron Mountain, Michigan, priced at $2,695,000.
Good morning, John and SVN. This is Ned Rupp at SVN Northco, and I'm pleased to present on behalf of my team the Pine Mountain Ski Resort and Timberstone Golf Course, which is the Midwest's oldest ski resort and one of the most well-known resorts overall in the Upper Peninsula of Michigan. We recently reduced the price significantly on this asset from $3,995 to $2,695, making this an extraordinary opportunity. The resort features a total of 290 acres, which includes a top 10 rated golf course in Michigan and a very well-known UP ski area. At the resort, there are 36 resort lodge rooms, 7 2-bedroom condos, and 6 resort apartment units. 6 of the condos are available for purchase separately. The ski resort features 27 runs with night skiing availability, multiple terrain parks, 2 restaurants, one of which features the Upper Peninsula Sports Hall of Fame, multiple banquet and event rooms, indoor pool, hot tub and sauna, ski in, ski out condos with full kitchens and patios, fully stocked pro shop, which is leased separately, as well as a beverage cart. The resort is adjacent to one of only 2 120-meter ski jumps in the United States, which is a popular tourist attraction and brings many spectators each year. This ski jump is owned separately. In addition to all of that, there is 70 acres of additional development land that's available for purchase that's partially on the ski area or on the hill. These sellers are flexible and would stay in on this deal as an ongoing equity partner and would also provide additional capital for future development on the site. Please reach out to any one of us if you have an interested client or if you have any additional questions. Thank you.
All right, thank you very much. Let's go to Joe and Joseph again. The Rowleys are at it, and Jody Recklin has joined them. This is a Victor, New York opportunity, priced at only $3,675,000.
Morning, John, SVN, and guests. Hope all is well today. Victor Heights portfolio is owned by Sabal Financial, who came to us through Tony Youssef in San Diego. Many thanks to Tony for this opportunity, and along came with it the property management. In this package, there are 5 office flex buildings that are situated on 3 contiguous tax parcels. They're anchored by 2 tenants with term leases and a couple of month-to-month leases. They're all built in the 90s, early 2000s, total of 60,000 square feet. Asking a price of $3,675,000 is $61 a foot, There is significant upside potential through lease up of the vacancies, and the owner would sell these individually. Thanks so much. Look forward to the offers.
All right, Joe. Thank you, sir. Let's go to Diana Peterson. She's got another auction opportunity for us. This one's in Aurora, Illinois.
Thanks so much, John, and good morning, everyone. This is 1975 Melissa Lane in Aurora. We've presented this in the past, originally with an asking price of $6.5 million in a confidential off-market sale. Then our next price was 5.9, then it was 4.9. We're now finally auctioning the asset at the bank's request with an opening bid of $3,750,000 plus a 6% buyer's premium. And this is a really nice property, great condition, built in 2006 in Aurora, which is the third largest city in Illinois. It's roughly 61,000 square feet. About 12,000 and change of that square footage is occupied by Presence Health or Provena Hospital, which is a very heavy credit tenant with quite a bit of term left on their lease. The rest of the building is occupied by a health club that has not been paying in full. When both the tenants were paying in full, the building was valued at $8 million. Again, this is an auction property now with an opening bid of $3,750,000 plus a 6% premium, and we are offering a 2% buy-side fee. If anyone has an investor who could repurpose the health club space, that's really the value add opportunity here. We have had groups looking at it who would do an indoor soccer or indoor volleyball type of use, also rehab center uses. So if any of you out there are working with investors with those types of possible tenants in their queue, or if any of you are, please give us a call. And we look forward to working with you. Thanks.
All right, Diana, thank you. Let's go to Gabriel Silverstein, who is our council chair of institutional and capital markets. He and Louis Delando have a wonderful Katy, Texas opportunity for you, priced at $7.3 million, or at least the equity investment is.
It is. This is a bit of a different one than some of these, because this is not for sale. This is an equity investment opportunity. We've got a sponsor who has owned this complex for roughly 10 years already, and would like to recap out his current investor on that. And it is in a great high-end area that's grown up around this property while he's owned it. Average household income in this area is about $120,000 per household. Fast-growing west side of Houston along the energy corridor, for those that are familiar with it. And in this case, a project that is it's already 95% leased and occupied. It is there's a little bit of value add to add with some of the units that haven't yet been upgraded, but he's got a below market option to buy out his existing investor on it, and as such gives him the chance to offer a new incoming investor returns that are really reflective of kind of a value add type return, even though the risk is what I would normally call kind of core plus. Again, given that there's 95% occupancy already in place and good cash flow. Renovations have mostly been done. There's a little bit left to do, and it's a great property in good location.
All right, Gabriel, thank you very much. We'll see you in New Mexico. Let's go to Andrew Holt and John Healy. They have a Chattanooga, Tennessee opportunity for you that we wanted to be sure you saw. It's priced at $50 million.
Hey, good morning, SVN advisors and John and any guests that may be on this call. Coming to you from the South, the best city in the South, Chattanooga, Tennessee. We are proud to bring to market Midtown Office Park here in our hometown of Chattanooga, located about 12 to 15 minutes from downtown. It's highly visible, 14-building suburban complex of single-story and mid-rise buildings, is situated on about 43 acres and boasts nearly 540,000 square feet of rentable space. Currently, about 40% occupied with GSA and institutional leases, including the United States Nuclear Regulatory Commission, the VA Clinic, IRS, DEA, and the United States Postal Service. Property generates great cash flows, but maintains growth potential with additional lease up and increased rents. Also wanted to throw in, there is a additional vacant 3.4 acre lot within the complex the sellers will consider throwing in the deal. As John mentioned, the complex is offered at $50 million, or 7.4 cap on existing income. I wanted to make a quick point about the Chattanooga market and John's economic points at the beginning. Our residential market is definitely mirroring that, and Chattanooga is really thriving, progressive market that's really been getting a lot of national attention recently, as evidenced by the New York Times naming it one of the top 45 places to go in the world, along with Outdoor Magazine naming it best town ever. Catalysts for that, strong job market, affordable housing, and the fastest internet speeds in the country. We certainly appreciate the chance to present. Please give us a call with your questions. Thanks so much.
All right. Thank you, gentlemen, for that great opportunity for our firm. Talk about another opportunity for our firm starting tomorrow. We're going to be in New Mexico, the land of enchantment. Our SVN National Conference kicks off Wednesday morning. Really looking forward to that. We've got 2.5 days of events that are unparalleled, and I know you're going to enjoy it. A big awards dinner on Thursday night, and we look forward to seeing everybody there. Again, be happy and be successful. We have the entire resort, so you're going to be with family the rest of the week. We look forward to that very much. As you know, everything we do at SVN is at www.svn.com, and 100% of the time, 50% of the commission is available to you when you close a transaction with us. We look forward to you doing that, and we hope that everyone travels safely to New Mexico. Good day.